Hey, what's up guys? Hope everybody's day is off to a great start. I'm over here today in Kaka'ako, over by Point Panic. I'm not sure if you're familiar with this area, but it's a pretty cool area right beside the ocean. You've got like a co-working collaborative space right behind me, and then over here you're going to see in a little bit the medical school for UH. So beautiful day over here, pretty windy, so let's see how this goes. But today we're going to talk about the condo and townhouse market and how they're being affected by rising insurance rates. It's been absolutely crazy. So yeah, we're going to get into that today. We're going to talk about what's going on in those markets, how the market has been affected, and what you can do about it. Because there are some things that you can do to help the situation. So after the Lahaina fires and after all of the hurricanes that have been affecting the East Coast, insurance companies have taken huge losses and they've had to pay out a ton in premiums. And so a lot of these companies have come together and tried to figure out ways to help reduce their losses and stay afloat. One way that they've done that is they've started to pull out of specific markets that they've figured have been more high-risk markets where the numbers just don't make sense for them anymore. And that's certainly been the case for Hawaii. So a lot of these insurance companies have just started to pull out of our market altogether. And what that does, what happens as a result of that is that insurance rates end up going up, because the insurance companies that are willing to insure in this market understand that they are taking higher risk. And then there's also less competition in the market, so they understand that they can charge more and people will continue to pay it. Because as we all know, if you've got a mortgage on a property, you're required to pay insurance. And the craziest thing about all this is that by all of this happening, it's caused insurance rates to just skyrocket year over year. And it's really just poured gasoline on the fire of an already very expensive real estate market. I think the highest year-over-year change that I've heard is a 100% increase. But I know I'm hearing from a lot of people, they're hearing a 25% increase, 15% increase, 50% increase. And it's really just pricing a lot of people out of their own home that they already own. If you own a condo or a townhouse, and your insurance costs go up that much, I mean, you're kind of expecting costs to moderately increase with, property values going up and tax, your property tax going up, but nobody expects insurance rates to go up like this. It's just absolutely insane. And ultimately, this has caused HOA fees to go up because the insurance companies that write policies on the HOA for the buildings insurance is really the thing that's become incredibly expensive, and it's put a lot of downward pressure on property values. So what we're seeing is that as insurance rates and HOA fees start to rise, property values start to decrease. Hey, real quick, if you're new to this channel, thanks so much for checking out this video. We're so happy to have you here. If you're getting value from this video, please like, share, and subscribe it. That's going to help us out tremendously because, we are a brand new real estate and lifestyle channel that features Hawaii. So if you would like to see more content like that, please like, share, and subscribe. It's going to help us out a lot. So thank you so much. All right, back to the video. So as a result of all this, the question then becomes, well, what can we realistically do about it? And that is a great question. So there's a few things that I think you can do. Number one, you can get much more involved in your building's association. Try to get on the board so that you have a voice, so that you can voice your concern and try to be the voice for the community so you can let them know how people are really suffering as a result of this. And let's be honest, there's a lot of people that are really hurting as a result of this. Many buildings have not only raised their maintenance fees year over year, but they have also done assessments. Can you imagine paying a $5,000 assessment just for insurance? I mean, you're never going to see that money again. It doesn't go to improving the building whatsoever, so it just feels like a complete waste. And there's a lot of people in these sort of properties that are on fixed income. Maybe they're not working anymore. Maybe they're retired and they just don't have the money laying around for these sort of unnecessary expenses. So getting involved in your local association is going to help out tremendously. You know, you can start to vote for more favorable policies to reduce expenses, to try to even things out a little bit. So, okay, maybe insurance rates do go up, but maybe we can cut back on some other expenses. Maybe if we have, 15 employees on staff at the building, maybe we have to cut that down and, work a little bit more of a tighter ship. These are some of the difficult questions that really need to start being talked about and voted upon. And so by being in the association, it'll give you the opportunity to start joining those conversations to try to make a difference and try to reduce costs for everybody. The second thing that I think you can do is you can reach out to your local political representative and let them know how important of an issue this has been. The Hawaii government is certainly aware of this issue, but I think the more people that reach out to them to let them know and voice their concerns, the faster they'll be able to act and move on new legislation that would really help Hawaii's property owners kind of work through this, help to put in new legislation that welcomes more competition to the insurance market, which will bring prices down. I think all of these things are really important, but the matter is that they just really need to act very quickly because people are really starting to feel the pain of this now. I own 2 condos right now. One is a commercial property for our real estate office, and the second one is a property that I'm doing, which is kind of like a flip. We bought it, renovated, and it's on the market to be sold. The one that's a flip, I was notified that the HOA fees are going to be going up 17%. So it's just crazy. You're never going to see that money again. And like I said before, it doesn't go to anything tangible within the property. This doesn't go to any improvements. It's not going to raise the property value by improving the building. And in the commercial property, they're doing an assessment. So they're raising the maintenance fees by 1%, and then they're doing a special assessment to cover the additional insurance costs. And I really like the way that they're doing that. That building is run very, very well. Great management team. So it's nice that they're doing it like that so that they're not doing a percentage increase year over year that is much harder to reduce down the road. And of course, the third thing that you can do is you can look at selling your property. A lot of people have been forced to this conclusion. They just can't handle it anymore. They just have to get out of the property already because they don't know how many more years it's going to be of rates going up, of HOA and maintenance fees going up. So they're just tired of it. And I really don't blame them. I spoke with a client yesterday. I helped his brother purchase a home about a year ago, and so his brother referred me to him, and he actually has a single family home in Eva Beach. It's called Eva Gentry Parkside. It's a newer community, but their maintenance fees skyrocketed. It's a single family home community, and the maintenance fees are around $900 a month. I just can't believe it. The conversation that I had with him was a very difficult conversation. It's like, I just explaining to him how much this negatively impacts property values. And that's if we can get it sold at all. I mean, I'm sure there's a buyer out there who's willing to kind of weather the storm, and wait it out for a few years for these fees to start coming down, but not everybody has that luxury. And his house is sitting vacant. He's in the military, so he's in Japan now, and he needs to cover not only the mortgage, but an ever-increasing HOA fee as well that is now $900. So it's just incredibly challenging. So I really feel for people like him, and it's always so shocking to see that it hits those kind of planned communities where they have an association, it hits them as well. Really, the only people in this time that are safe are the ones that have single family homes where they're not, they only need to pay their homeowner's insurance. And those have been rising a little bit, but not quite to the degree that some of these HOA and buildings insurance has been rising. So this has presented enormous challenges for a lot of people. It's been just such a point of contention, a huge issue for all property owners in Hawaii that, you own a condo, a townhouse, or a single family home in kind of like a planned community where you've got an association. It's just been such a huge issue, and unfortunately, it doesn't look like there's any end in sight. 2025 is just right around the corner. A lot of us are starting to get the letters from our association to let us know how much rates are going up. So unfortunately, the struggle kind of continues, and we're going to see how that plays out in the market. And I just did another video about the real estate market update that talks about, how the condo and townhouse market are being affected, how the single family home market is being affected. So if you want to check that out to get a little bit more context and information, please do so. You can check that out right here. Have a great day. Aloha.